Billy Long, a former U.S. congressman from Missouri, has been confirmed by the Senate as the new commissioner of the Internal Revenue Service, IRS, with a 53-44 vote. His appointment, nominated by former President Donald Trump, comes amid significant challenges for the IRS, including substantial staffing cuts, technological modernization efforts, and ongoing operational transformations. Long, who previously advocated for the abolition of the IRS, faces scrutiny due to his lack of experience in tax administration and past involvement with firms linked to fraudulent pandemic-era tax credits. The IRS is currently dealing with a reduction of approximately 20,000 staff members, equating to about 25% of its workforce, which could impact its ability to manage the upcoming 2026 tax filing season. These cuts are part of directives from Elon Musk's Department of Government Efficiency and coincide with Trump's proposed fiscal 2026 budget, which suggests a 37% reduction in IRS spending. This financial strain could further challenge the agency's ability to close the existing $696 billion tax gap and maintain taxpayer services. Long's leadership will also influence the future of the Direct File program, a free electronic tax return filing system initiated under President Biden. The program faces criticism from Republican lawmakers and commercial tax preparation companies, raising questions about its necessity and effectiveness. As Long steps into his role, the IRS's capacity to navigate these challenges and maintain operational efficiency amidst structural changes remains uncertain, highlighting the broader tension between fiscal policy ambitions and the operational realities of federal agencies.
Boeing Co., BA, is facing renewed scrutiny after a Dreamliner 787-8 crash near Ahmedabad, India, causing its stock to drop over 5% on Thursday. This incident comes just days after Boeing's stock reached a 15-month high, buoyed by a resurgence in aerospace demand and strategic wins like a $96 billion contract with Qatar Airways. The crash has rekindled safety concerns that Boeing had been striving to overcome following previous setbacks, including issues with the 737 MAX. The Federal Aviation Administration, FAA, continues to apply stringent oversight, capping monthly 737 MAX production and inspecting each aircraft before delivery, potentially stalling Boeing's recovery momentum. The Dreamliner crash poses a significant threat to Boeing's fragile recovery, which had been supported by the resumption of 737 MAX deliveries to China and new defense contracts. Analysts had been optimistic, with firms like RBC and TD Cowen setting price targets of $230 and Bank of America upgrading the stock to a buy. However, the latest safety incident underscores the volatility inherent in Boeing's recovery narrative, exacerbated by ongoing challenges such as tariff uncertainties and materials inflation. Investors are now reminded of the precarious nature of Boeing's turnaround, with potential turbulence ahead as the company navigates these renewed challenges.
JetZero has announced a significant $4.7 billion investment to establish a production facility at the Piedmont Triad International Airport in Greensboro, North Carolina. This facility will manufacture the company's innovative all-wing Z4 airplane, which boasts a 50% improvement in fuel efficiency over current commercial jets. The move is expected to create over 14,500 jobs, marking the largest job announcement in North Carolina's history. The Z4, designed to seat 250 passengers, represents a leap forward in aviation technology with its focus on sustainability and efficiency. JetZero plans to commence construction in 2026 and aims to deliver the first commercial airplanes by the early 2030s. North Carolina's favorable business environment, characterized by its low corporate tax rate and robust talent pool, played a crucial role in attracting JetZero. The state is recognized as a leading hub for manufacturing and STEM education, producing over 30,000 STEM graduates annually. The collaboration with Siemens will ensure the facility leverages cutting-edge digital and AI technologies to enhance production efficiency and quality. This development not only strengthens North Carolina's position as a burgeoning aerospace hub, but also promises significant economic benefits and job opportunities for the local workforce, supported by customized training programs through the state's community colleges.
The U.S. Treasury's recent 30-year bond auction demonstrated robust demand, particularly from foreign investors, defying concerns following a lackluster 3-year auction earlier in the week. The $25 billion auction priced at a high yield of 4.844%, slightly above last month's 4.819%, marking the highest yield since January. Notably, the auction stopped through the when-issued yield by 1.5 basis points, indicating stronger than expected demand compared to the previous month's 2.6 basis points. The bid-to-cover ratio, a measure of demand, rose to 2.430, surpassing both last month's 2.314 and the 6 auction average of 2.392. Foreign investors played a significant role, with indirect bids accounting for 65.2% of the auction, up from 58.9% last month and the highest since January. Direct bidders took 23.4%, slightly down from 27.2% but still above the recent average, leaving dealers with just 11.4%, the lowest since November. This strong demand from non-dealer participants reflects confidence in U.S. long-term debt, even amid broader concerns about the U.S. fiscal outlook and upcoming supply pressures. The market reacted positively, with 10-year Treasury yields falling to session lows of 4.34%, though they later retraced some of these gains. This auction highlights ongoing global interest in U.S. Treasuries despite fiscal uncertainties, underscoring their status as a safe haven asset.
Chime Financial made a significant entrance into the public market with its initial public offering, IPO on NASDAQ, where shares surged 59% from the initial pricing of $27 to open at $43, before closing at $37.11. This performance valued the company at nearly $15 billion, reflecting strong investor confidence in its business model. Chime successfully raised $864 million by selling 32 million shares, signaling robust interest in its approach to no-fee mobile banking services aimed at Americans earning under $100,000. Unlike traditional banks, Chime generates revenue primarily through payment fees, which positions it to address gaps in conventional banking, particularly for underserved communities. The IPO had previously faced delays due to market volatility linked to former President Trump's tariff policies, but the recent easing of these policies has revitalized the IPO landscape, especially for fintech and cryptocurrency companies like Circle Internet and exchanges such as Abolish and Gemini. Chime's asset-light business model, facilitated through partnerships with the Bancorp Bank and Stride Bank, allows it to operate without a banking license, similar to Uber's strategy in transportation. This approach enables Chime to focus on innovation and customer service while avoiding the regulatory burdens faced by traditional banks. Despite past challenges, including a near collapse in 2016, Chime has demonstrated resilience and growth, with revenues increasing from $1.3 billion in 2023 to $1.7 billion in 2024, and a net income of $13 million reported in the first quarter of 2025. However, the company has cautioned that profitability might fluctuate as it plans to invest further in growth. CFO Matt Newcomb emphasized Chime's mission to simplify banking and enhance consumer financial health, setting it apart from traditional institutions. This IPO not only marks a significant milestone for Chime, but also highlights the growing market appetite for fintech innovations that challenge conventional banking models.
Oracle Corporation's stock surged to an all-time high following the company's announcement of an optimistic revenue growth forecast for the current fiscal year. The tech giant's shares rose over 13% to close at $199.86, marking a 20% increase in 2025 alone. This bullish outlook was primarily driven by Oracle's projection of its cloud infrastructure growth, which is expected to rise from 50% in fiscal 2025 to over 70% in fiscal 2026. The company also anticipates a doubling of its remaining performance obligations, indicating a robust pipeline of future revenue from existing contracts. The announcement prompted a wave of positive reactions from financial analysts, with several institutions raising their price targets for Oracle's stock. KeyBank and UBS both increased their targets to $225, while Deutsche Bank set a new target of $240, labeling Oracle's results as a watershed cloud moment. Analysts highlighted Oracle's strategic advances in cloud computing as a key driver of its impressive growth trajectory, suggesting that the market may still undervalue the company's potential. This optimistic sentiment reflects broader investor confidence in Oracle's ability to capitalize on its cloud services, potentially influencing market sentiment and investor strategies in the technology sector.
Goldman Sachs has adjusted its outlook on the U.S. economy, lowering the probability of a recession within the next year from 35% to 30%. This revision comes in the wake of a new trade agreement between the U.S. and China, which has eased tensions that were heightened by President Donald Trump's previous tariff policies. The agreement includes significant measures, such as the removal of Chinese export restrictions on rare earth minerals and the reinstatement of access for Chinese students to U.S. universities. These developments have bolstered investor confidence and mitigated fears of an economic downturn, which had been exacerbated by the Liberation Day tariffs imposed in April. The easing of trade tensions has brought financial conditions back to levels seen before the tariffs, and indicators of trade policy uncertainty have diminished. Although current inflation data suggests only a modest impact from tariffs on U.S. consumer prices, there is an expectation of future price increases. In light of these changes, Goldman Sachs has also revised its forecast for U.S. GDP growth in 2025, increasing it from 1% to 1.25% on a quarterly basis. This adjustment reflects a more optimistic outlook on economic growth, driven by improved trade relations and a more stable market environment.
UroGen Pharma Limited, Nasdaq URGN, is facing a class action lawsuit initiated by the Gross law firm, which has notified investors about the allegations and the upcoming deadline for lead plaintiff appointment. The lawsuit concerns alleged misleading statements and omissions by UroGen related to its clinical study for UGN-102, a key pipeline product. The primary issue is the lack of a concurrent control arm in the Envision study, which is critical for demonstrating the drug's efficacy. Consequently, this oversight could jeopardize the approval of UGN-102's new drug application (NDA) by the FDA, potentially impacting UroGen's stock value and investor confidence. The class period for affected investors spans from July 27, 2023 to May 15, 2025, with a deadline of July 28, 2025, to register as a lead plaintiff. The lawsuit underscores the importance of transparent and accurate disclosures in maintaining investor trust and market stability. For UroGen, the outcome of this legal action could significantly influence its market strategy and financial health, particularly if the NDA for UGN-102 is compromised. Investors are advised to monitor the situation closely, as the resolution of these allegations could have broader implications for UroGen's operational outlook and its standing in the pharmaceutical industry.
NVIDIA CEO Jensen Huang and his wife Lori have seen their private foundation's assets skyrocket, driven by the meteoric rise of NVIDIA's stock. The Jensen and Lori Huang Foundation's assets have surged from $828 million to over $9.2 billion in just 5 years, making it one of the largest private foundations in the United States. This remarkable growth is attributed to the appreciation of NVIDIA shares, which Huang initially donated to the foundation. Despite its substantial assets, the foundation maintains minimal overhead costs and has made relatively few public donations, with a significant portion of its disbursements directed to donor-advised funds, DAFs. The foundation's rapid expansion highlights the increasing influence of tech-driven philanthropy, a trend that is reshaping the landscape of major charitable organizations. However, experts caution against the foundation's heavy reliance on NVIDIA stock, advising diversification to mitigate risk. As the foundation's assets continue to grow, it is legally required to increase its charitable disbursements, with estimates suggesting it will need to distribute $369 million this year. The foundation's operations remain largely opaque, with limited information available about its internal structure and decision-making processes. This development underscores the broader trend of tech entrepreneurs leveraging their wealth for philanthropic purposes, often using DAFs to manage their charitable contributions while retaining flexibility in grant-making decisions.
Advance Biotherapeutics, Inc., Nasdaq, IAVA, is currently embroiled in a securities fraud class action lawsuit, with shareholders urged to contact the Gross law firm by July 14, 2025, to discuss potential involvement. The lawsuit centers on allegations that Iovance, misled investors about its growth potential and operational capacity during the period from May 9, 2024 to May 8, 2025. It is claimed that Iovance was not sufficiently equipped to meet the demand for its treatments, despite making optimistic statements to investors. These issues became apparent following a significant reduction in revenue guidance announced on July 25, 2024, which was attributed to maintenance challenges, lower than expected sales of Proleukin, and inconsistent patient treatment rates at approved centers. The aftermath of these disclosures was severe, with Iovance's stock price plummeting by approximately 44.8% from $3.17 to $1.75 per share on May 9, 2025. This sharp decline highlights the potential financial impact on investors and underscores the necessity for transparency and accurate reporting by publicly traded companies. The Gross law firm, recognized for handling class action lawsuits, is advocating for investor rights and seeking compensation for those affected by the alleged misinformation. This case underscores the importance of responsible business practices and the role of legal oversight in safeguarding shareholder interests, with potential broader implications for investor confidence in the biotech sector.